It's a question of read 'em and weep this morning. World markets, which had been up earlier in the week, were once again in free fall. In Japan, the index was down by 11%. In Australia, by about 7%. Markets in Europe, which had opened up about 5% down, later made up some ground, but nobody knows where the bottom is. This is bad news chasing itself around the world. If there was any hope that world markets could decouple from American declines, the numbers from Sydney to Singapore to Beijing tell a different story. After Wall Street's drop yesterday, the fall in Tokyo was the biggest in 20 years. Japan's Prime Minister Taro Aso said investors were concerned the massive U.S. bailout package was still too small. Insufficient, he called it. What's worse, the losses are no longer simply the result of falls in bank and finance stocks. The decline is now spreading to other companies, particularly those involved in natural resources, where demand is falling in anticipation of a world.
This is dire, and I have to say that being down another 5% this morning, losing over 200 points in the first 20 minutes trading is very, very dispiriting for everybody. It's now a question of really that the Banking Rescue Act has come too late. It should have happened a year ago, but we've covered that ground. It was the abrogation of responsibility in the United States and the United Kingdom to actually investigate how dire the problem was after Bear Stearns that's got us into this mess. And unfortunately, we are staring vertically into recession. It has arrived.
All of the money poured into banks around the world by governments has so far not paid off. The whole point was to try to free up credit, but the indexes used by banks to loan to each other and to industry have barely budged. Mark Phillips, CBS News, London.